Hello everybody, I'm Shrinidhi and welcome to my channel. So in today's topic we are going to learn about recording of transactions. If you are new to my channel then you can look into my earlier videos where I have given the basics of accounting, that is why we need to prepare financial statements and what is the base. We have also given a brief introduction on the accounting standards, which are the guidelines on preparation and presentation of the financial statements. So in today's topic, we are going to learn about the basic and fundamental step in the accounting process, which is recording of transactions. This is nothing but journalizing. So we pass journals, which is the first step in the accounting process. That is what we are going to learn in today. I'll give a big picture on the flow of events on like where does this financial accounting process begin and where it ends. So we are now talking only about financial accounting. So any transactions which are of non-financial in nature, but still would be taken into account, like still can be viewed on an accounting perspective. For example, the human resource or the manpower. That is not the area of discussion at present. So we are going to know about the learn about the flow of events in case of financial accounting. So it begins with events or transactions which are financial in nature and which are quantifiable. Also, it should have a source document. So in the for a financial transaction, it should be backed by a source document and those which are of quantifiable. Once this is being identified, then we move to the next process, which is recording. Recording is nothing but passing of journals. So in this process, based on the source document, we prepare journals. Depending on the process the company is maintaining for recording of transactions, in some most of the entities it could be like they would maintain a cash or bank book where they would account for all the cash and bank related transactions. If it is a trading nature, then or the purchase sales book or purchase and sales returns book would be there. Whichever is not being included or covered in any of these separate books would be covered under journal proper. For example, purchase of a fixed asset on credit. It would neither go to any of the cash book or purchase sales book, and it is a fixed asset. So those such transactions would go in journal proper. So depending upon um, the practices of the company follows, but it all comes under this one step of preparation of the journals. Upon identification of the financial transactions, this is the first step to record those transactions in the books of accounts. Next is classification of these journals into ledgers. Once they have been classified into ledgers, then they are summarized, preparing a trial balance. So the trial balance gives the breakup of all debit balance accounts and credit balance accounts. Finally, these balances are being reported in the form of financial statements, which includes income statement, position statement. In other words, it is the balance sheet and notes to accounts in order to support the financial report which is being presented. For example, notes to accounts could include the accounting standards which are being followed, practices or the accounting policies of the company which it follows. It also narrates about briefly on the business the company works into, and so on. So this is the overall picture on how a financial transaction passes across various stages in the accounting process. Now let's go a little bit further on accounting equation. In accounts, it is like debit, credit. It was like full of debits and credit. But what is this debit and what is credit? So I'll just move into explaining to you on what is this debit and credit. The term debit is derived from the term debitum, which is a Latin word. What does the term debit mean? It means any money which is owed to us is a debit, and creditum, which is derived from a Latin word, which is means credit or trust or belief. And the moment we tell credit, it means that we owe money to others. I have been repeating this point for many fundamental videos on accounting, that onto the need and the purpose of preparing this elaborate process of financial statements. So as we already know, we prepare the financial statements in order to be utilized by the users. So in our users, we have the various stakeholders, government, consumers, customers, our suppliers, creditors, and of course the owners or the shareholders who are those whose funds are being utilized in the running of the business. So it is the shareholders for whom we are reporting these entire financial statements. So in such a case, it is their funds, right? We know that entity concept, that is business is different and the owners are different. So when it is the owners' funds which are being utilized for running of the business, then it is they who have given the funds and we are liable to the owners. So when we are liable to the owners, they have kept a trust on us. So they are like our liabilities. So they are the liabilities or the capital of the entire business, right? So it is their funds. So for a business, the capital is always a credit because the business owes money to them. So capital is credit. And what does debit mean? Debit means money which someone else owes to us. All those are debits. So we will be coming across this debit and credit. Just get used to what is the nature of a debit transaction and a credit transaction, and the accounting becomes so simple. So the rest all would be like substantiating us to. So once you understand the nature of the transaction and the intent on why a particular transaction has happened, then passing of the journal or reporting or following the accounting standard or even understanding the accounting standard could be very simple. This is the base on of the accounting equation where assets is equal to liabilities plus capital. You would be able to appreciate well because you would see this in any balance sheet that you will have on the liability side you will have capital and other liabilities, creditors and so on. And on the asset side you have the assets and liability side, right? Capital is also a form of liability only. So assets equals liability plus capital is nothing but the position statement or the balance sheet. So the financial statements are being prepared, as I said, it is being prepared for the users. It is the owner's capital which are being reported, and we are only reporting how this capital is being distributed or invested in various assets, or whether it is being utilized in funding more money, more capital, or in the form of creditors. So we can say if we rewrite this equation, then we will come to this. Capital is equal to assets minus liabilities, which is also known as the net worth of an entity. So if you want to calculate the net worth of an entity, we do it by assets less liabilities. This is a very straightforward method. But when it comes to valuation of the business, then we can't take the book value of the assets and liabilities. We have to value the market price of the or the comparable market price of the assets and liabilities. Then we will get to know the net worth, or that is how we do the valuation of an entity. So as I said earlier, credit means any entity or individual or thing to which we owe money. And what does debit mean? Debit means any entity, individual or thing who owe us money. So I would like to ensure that you understand this term debit and credit very clearly, because this is the base, and for once you know the nature of a transaction, immediately you should be able to tell whether it's a debit or a credit. Let's move on to the next. The topic is recording of the transactions. So we will see the 3 golden rules of journalizing a transaction. And for the 3 golden rules, first we need to know the nature of the accounts, because these 3 golden rules are based on the nature of the accounts. Nature of accounts are classified into 3: personal account, real account, and nominal account. What is a personal account? Any account or general ledger which is related to people, associations, or companies or entities. It could be natural or artificial persons. All those are personal accounts. So what is if a personal account, if the nature of the account is personal account, then the rule is debit the receiver and credit the giver. Next is real account. Any general ledgers which are related to assets and liabilities. If the general ledger is an asset or liability, is in nature of asset or liability, then those are real accounts. And for real accounts, these are mainly as on date balances means their balances get carried on from one year on year. They are long term long term, or they are continuing in nature. For example, stocks, assets or fixed assets, your creditor balances, your debtor balances. These are balances which could be either assets or liabilities, and they get carried over year on year. So any accounts which are in nature of assets or liabilities, then they are real accounts. And what are nominal accounts? All other day-to-day expenses, any or incomes. Day-to-day expenses or income means which are revenue in nature. So we can understand like this. Real accounts are mainly assets and liabilities which are capital expenditures and capital incomes. All those are long-term in nature, right? So they are continuing in nature. They are as on date balances. All those are real accounts, and those which are revenue in nature, that is all expenses, gains, losses, incomes, which are for a period, and they are being usually gauged as whatever it is happened for a specific period. They are not carry over balances. They are all revenue in nature. All those are nominal accounts. If in case you would like to learn about what is revenue expenditure, capital expenditure, then you could look into my earlier video, which I have tagged above. Now let's move into the golden rules of journalizing. And here I am explaining it in detail on why the rule goes like that. You know that in my earlier short video, I have explained on why liabilities first and then the assets in a balance sheet. Many basic and fundamental questions I have answered in my short videos. Please have a look, and I will give the link in the description box, because these are fundamental areas of accounting which like we are being taught as such without understanding that as to why we have to do like that. Because if we appreciate well on why we do that, then our future journey into the accounting standards would be very easy. So that is why it is very important that we are very strong in the fundamentals, especially the reasons behind why we do these processes. Personal account, what is the golden rule? It is debit the receiver and credit the giver. But why? If you really know and understand what the debit and credit term means, then it's as simple as that. As I already said, we have the entity concept, that is the owner or the one who has funded the business is different and the business is different. So obviously all the owner's funds is a credit. It is a liability for the business. So credit means, when we know that credit means anyone or anything to whom we owe money, they will be the giver to us, right? So if they are the givers. So receivers, we give because they owe us money, something should be on the opposite. They owe us money, we have given something. So they have received the service and liable to pay us. That's why they owe us. So debit means anything. So anybody who owe us money, then they are the receivers. That is why it is the debit the receiver and credit the giver. Next is for real account. Debit what comes in and credit what goes out. But why it is debit what comes in and credit what goes out? These are assets or liabilities, general ledgers, as I have already said. All these are as on date balances which get carried over year on year. So its mere nature itself signifies that asset in nature transactions are debit, means they are the what areas in which the capital is being invested into, which means that it is utilization of the capital. And liability in nature means they are credit, because nature of asset means what is debit? When someone else owes us money. So it is asset in nature, which means that it is a debit. And if it is a liability in nature, then those general ledgers are credit in nature. Nominal accounts are those we already know, the expense, incomes, gains and loss accounts. So the rule for this is debit expenses and losses and credit incomes and gains. But why debit expenses and losses? Expense or loss eat the capital, and hence it is in turn to be deducted from the owner's funds. In other means, we debit this account. So any reduction against the capital is what? It is a credit. So anything which goes reducing the capital would be a contra, right? So it is a debit. Like I am giving a logical reason. It is this is the logic why expenses and losses are debit. and why incomes and gains are credit, they in turn add to the capital of the entity. Hence, it is a credit because you know that capital is a credit, and adding on to the capital would again be a credit. I hope that you would have a better understanding on the reasons behind the golden rules of accounting, and you would be more clear on journalizing as well. If in case you would like to know, if you have any doubts relating to journalizing, so this video is all about journalizing. The forthcoming videos would be about ledgers, trial balance, financial statements, and so on. And I would be also posting about preparation of the financial statements and notes on accounts. Whenever I would get time, I will also post videos on other accounting standards which have not covered so far. If you are new to my channel, then please I would request you all to look into my earlier videos on basics on accounting standards and accounting standard relating to property, plant, equipment. I have also posted on revenue recognition. I look forward for your suggestions and feedbacks. And of course, if you have any topic or any area in accounting or in finance which you would like to learn in detail, then please comment and share my video so that many others who aren't aware of this would get to know. Please like, share, comment, and subscribe to my channel. And thank you so much for all your support. Thank you.